Hi students. In budgetary control, especially for new syllabus, the important concept has been introduced by the ICA, control mechanism. With respect to control mechanism, two different things they are telling. One is feedback control, another one is feed forward control. Feedback is very easy. We are habituated to see many circumstances of feedbacks and all. Our Akashatha is going to explain what is the control mechanism, what all the types are there, what is called feedback control, and what is called feed forward control. Welcome, Akashatha.
Thank you, sir.
Yes, stop.
Thank you for the opportunity. Good morning, everyone. I am Akashatha. Today I'll be talking about the topic. I'll be speaking about feedback and feed forward controls. It is under the budgetary controls. It is a potent examination question. So let us understand what it is. So feedback and feed-forward controls are control schemes for systems which react automatically to the changing business environment dynamics. So feedback and feed-forward controls can coexist in an organization. The organization can either indeed adopt independently or can adopt both of them. Even though it is adopted together, they function in a very different manner. So let us find out what are these functions and how do they function. First, going ahead, feedback control. Feedback control, as we all know, Newton's third law says every action has an equal and opposite reaction. Similarly, in the feedback control system, reaction is followed by an action. That is, only the event has to be occurred and an error must be generated from that event. Only then corrective actions can be taken by the management. Here, we plan for the future based on the past performances and past errors and success rates. So here we'll be comparing the budgeted overheads and budgeted data and the actual data. It's a basic example for traditional variance analysis. And there are 4 types of feedback. There's positive, negative, secondary, and primary. So let's go one by one. First is primary feedback. So under primary feedback, when we compare the actual data and the estimated data and the actual data, the variance is very low. Since the variance is low, it will be escalated only to the line management, say production manager or the purchase manager. So the information will be submitted to control reports or comparison reports. Here, since the variance is low, the management might or might not take any feedback, give any feedback since the variance is low, or it can be escalated to the higher level of management. Sorry, the feedback won't be escalated to the higher level of management, and corrective action will be taken by the line management itself. Going ahead, secondary feedback is wherein the variance is very large, and hence we have to involve a higher level of management in this. So higher level of management will have to review the process again and then change the plans and or change the plans or alter the plans accordingly. For example, suppose the purchase department had to purchase raw material at the rate of 20 rupees. Suddenly, due to the market condition, the raw material price has now become 30 rupees. Here, the line management, that is purchase manager alone, can't take the decision. He has to approach the higher level of management and then decision must be taken. So moving ahead, positive feedback. Positive feedback is where the management will try to reinforce the deviation from the standard. That is, they'll move towards in the direction of the deviation itself. Here, the management will not alter any process or inputs. That is, it is happy with whatever output it has achieved. For example, the company had to produce 1 lakh units. They ended up producing 1,05,000 units. The company is happy about the extra 5,000 units. It will not alter any process and any inputs for this purpose. It will go with the it has since it has achieved the variance or it has exceeded its expectations. So the company will not give it is happy about it, so the company will not do anything about it. Now going ahead, it is negative feedback. Negative feedback is wherein the company will try to reverse the deviation from the standard. That is, the company is not happy with whatever it has produced. For example, here it will try to alter the input and processes and it will try to reinstate it to the original state. Taking a similar example, the company had to produce 1 lakh units, but then it ended up producing 90,000 units. It might be because of the machine error. So the company has to give rest to the machine for some time so that the machine can restore to its original state and end up producing that extra and additional 10,000 units to meet the targets. So as I told you, feedback will be given through control reports. What are these control reports? It's a feedback device and it is a part of a feedback system, but it by itself will not cause any change in the performance. The management has to take some action only then there'll be a change in the performance. So the control reports usually contains the accomplishments and the responsibilities of the management. What was the accomplishment and who was responsible for achieving it? And it must be extracted very promptly. Suppose it had to be extracted month-wise, feedback must be given every month. And it must be in a proper standardized format. You can't give a report today in a different format and next month in a different format. It must be ready properly so that the management can take decision based on it. And it must disclose the trends and relationship. That is what was suppose the management had to compare previous month's data and this month's data and draw a relationship between them, analyze and then take decision. It must be ready for it. And it must obviously contain the actual difference between the actual and the variables, actual and the budgeted estimates for proper decision making with reasons. It must be mentioned. So even the feedback system has a few disadvantages. Say it is post-mortem. That is, you can't go back and correct the error which has already occurred. And detection of error is very difficult. The success rate of feedback system depends upon the company finding out the error. And the error, even though the company has found out the error, by the time it is detected and confirmed that it is actually an error, and by the time it is revised such error, the time gap it will be so much that it will the actual process or the results would have changed, and there would be no point of taking such action at that point of time. So this is the main disadvantage. So let's move forward. Going ahead, it's feed forward control systems. Feed forward, as the name suggests, putting a foot forward right now and taking action right now, so that the company will not, the company before the event has occurred, so that the company will avoid such errors or destruction. For example, so here it will be compared, budgeted and the forecast will be compared. So budgeted is like for an year and forecast is about the current situation and conditions. And budgeted is wherein the companies, it says what the company is actually expecting, whereas the forecast tells where the company is headed, where is it right now. So by comparing these two, any variances which will arise will be analyzed and then decision or will be taken. Action must be initiated by the management. So this is a trigger point for feed forward control. So for example, suppose you are the industry, suppose a company had to purchase raw materials from the neighboring state, but we got to know that the neighboring state had some industrial disputes, and the price of the raw material is going to surge in the near future. So management, being skeptic and being smart and alert about the situation, they must take the decision right now and purchase raw materials beforehand right now, so that it won't be shortage, and also they can avoid giving extra for that raw material. Also, another example is that cash estimates. You keep your cash balance intact, so that planning about the future, the cash won't be inadequate in the future. So there are few guidelines for implementation of feed forward controls. It requires a thorough planning and analysis, and it will take a lot of time to prepare a forecast and plan and analyze and take decision regarding it. And it must be the data inputs must be collected regularly, and the data collected must be reassessed regular basis, and the company must be very discriminative while selecting the input variables. And the forecast must be kept dynamic as per the changing environment. It must be altered. So another few examples, more like you have to getting the inputs at a bulk discount, and when in case the raw material is insufficient, and increasing the efficiency of the production, and replacing the suppliers, and the usage of alternative raw materials, it all comes under the feed forward control. Even though the feed forward control is better as compared to feedback, there are few disadvantages. Say the future is very uncertain. We can't estimate what can happen in the future. Even though we estimate the future, there are no potent tools which will help us in mitigating such uncertainties. Also, as I told you, the forecast requires a huge amount of time, energy, and costs to be prepared, and the company might lose out on the productivity. So this is about the feed-forward control. Let us summarize. So feedback control system. Here, the event occurs first, and then the action is taken. And the feed-forward, first the action is taken, only then the event is occurring. And the trigger point for feedback control is output. That is only after the output is processed, then you initiate the process of feedback. And the feed-forward, the trigger point is input. Before the input itself, you analyze and take decision. And the feedback is a submissive approach. Feed forward is an aggressive approach. Feedback is more like a reactive, and feed forward is proactive in nature. And the major disadvantage in feedback is the time lag between error detection and correction. That disadvantage is mitigated in the feed forward control system. A company must actually try to adopt both these feedback and feed forward controls in its environment, so in its company, so that it can be dynamic to the changing environment. So that's it, guys. I hope you guys have understood. Thank you.
Good, Kana, good. Kana. Can you please tell me? We are collecting data from the students in our Premier Academy. That information, whatever we are gathering, comes under feedback or feed forward control?
Feedback, sir.
Feedback, very good. As a chartered accountant, we are entering to office, new client. They want to start a new branch or a new company in India. We want to provide some advice. We are going to be chartered accountant for them. Okay. Then what could be the control we have to?
Feed forward, sir.
Feed forward. Easy or not? So if you are CA, we are going there, then what are all the consequences going to happen? What and all they have to take? Whether registration is important or not? What are all the license they have to take? DIN is important, TAN is important. Clear? So today may not necessary. Tomorrow, some consequence they have to face. Therefore, that and all comes under one? Feed forward.
Feed forward.
That's logic or not? So different in feedback and feed forward control. Very important question. Good, Kanna. Nice way of presentation. Keep it up.
Thank you, sir.